Hi, everyone. Welcome to an ESTAS webinar. I'm delighted today to welcome Chris Bland from Private Bank of Finance, who is one of the co-founders. Hi, Chris. Very welcome to you today.
Morning, Ben. I'm delighted to be here. Thank you for having me.
No, it's going to be really, really good. And I think for anyone who is joining us today, this is going to be a very interesting topic of conversation because I've been really interested to learning about what private bank finance does, but also why they started and actually which area of the market that they are operating in. Obviously, everyone knows at the moment with the interest rates that have gone up and affordability, that is causing a lot of people some concern in terms of how much can they afford to borrow. Chris, obviously, you guys are primarily operating in the kind of high net worth space. So at the moment, what are you seeing in terms of the market and the conditions that we're currently in?
There's some really good points there, Ben. And to be honest, the high net worth market is just the top end of the overall market. And as a result, they're not immune from all the things that are going on in the world. So there's massive uncertainty over interest rates. We've seen these, fairly meteoric rises over a relatively short period. So we're getting lots and lots of questions about that. There's the expectation of further rises in base rate. In fact, I posted on my LinkedIn the other day a really interesting short video by Andrew Bailey, Governor of the Bank of England, where he made it quite clear that inflation was their principal target, and to get inflation down would ultimately be for the benefit of the whole and the greater good. And that would inevitably, require additional rate rises in between. However, I think, some of those rises have already been priced into the market. So there's a degree of certainty there, but more importantly, the market themselves are now not expecting rates to rise perhaps as high as they initially expected when everything sort of went wrong initially. So yeah, that's one of the key things that people are talking about. And as I say, the fact that it's in the high net worth end of the market makes no difference because they're still buying properties, they're still moving house and getting on with their lives, etc.
Yeah, absolutely. I think it's very easy as an outsider to assume that the rich will always be rich and that anything that happens in the UK economy doesn't affect those people. But actually, I think if we're really breaking it down, it's probably the less than 1% that it really doesn't affect. And actually, there's a lot of people in between who are still operating in that kind of high net worth end of the market, who still have incomes. They're still on PAYE. They still might be getting dividends or have multiple sources of income.
Sorry to interrupt you. It's interesting you say that because ultimately, the high net worth buyer, particularly for a regulated mortgage, buying their matrimonial home, will often be at the top of a chain. And therefore, they are completely and utterly dependent on the first-time buyer at the bottom end of that chain, who, we all know from the press coverage at the moment, are really struggling to raise mortgages, have sufficient savings to qualify and demonstrate affordability. And that leads on to another element that I think is really important at the moment. And what I've always found over my many years of experience is that borrowers generally focus on loan to value. So in other words, if they're looking for a loan that's at 75% of the value of the property that they're buying, their perception is actually that's very acceptable. And of course, in the heyday, we were seeing 95% loan to value. Crikey, I remember back to the days when some lenders were doing 105 and 110%.
Absolutely.
So, this isn't new. However, in the current climate and with the controls that are put in by the regulator, loan to value is just one of the key measures that you have to look at. And in private banker finance, we tend to focus more on what we call loan to income and affordability. So in generic terms, people will hear the expression salary multiplier. So a lender will traditionally lend 4.5 times salary. We use the word income because in the high net worth arena, high net worth clients invariably have more complex remuneration structures, shall we say. So it will be a portion of salary. There'll be dividend, there'll perhaps be trust income of some sort, maybe some offshore income, maybe even capital movements, etc. I mean, every individual circumstances are different. And the important thing is to make sure you're talking to a lender who understands all those various streams and adds a value, for want of a better expression, to them in some way, shape or form when establishing how much they will lend. The other thing that you then need to realise is the lenders are then required to stress test the affordability. So if you're borrowing at a rate of, let's say, 5%, in the background, the lender will be stressing that by maybe I've seen +3, maybe +4%. So they need to be able to demonstrate that in the event of rates rising, which of course we've all seen recently, they're not lending to clients who will then be put in difficulty when rates rise. So it's really important that when borrowers are looking for funding, they are talking to professionals who can help them through that journey and explain that and come up with lenders, all of whom have different policies and different appetites at different times.
Absolutely. And so just to obviously for anyone to understand your position within the market, how does private banker finance work then? So if I am a high net worth individual, I'd love to say I am, but I'm not. And I am struggling to get my mortgage approved because I'm talking to a broker and my multiples currently aren't working. How does private banker finance then come into play? Do I contact you directly, or do my broker reach out to you? What would their kind of process be there?
Okay. Initially, we've set up as a business to business organisation. So we're very much targeting fellow mortgage brokers, estate agents, IFAs, and other property and finance professionals. The reason for that is we've identified this potential gap in the market where, as property values have generally increased over the country, we're seeing by volume, by count, not by value, but by volume, by count, a steady increase in the number of mortgages for £1 million plus that are actually being drawn down every year. And although as a whole that accounts, I think the last stat said something about 0.6% of the overall market by volume, the problem is I'll take a mortgage broker, for example, who's working in the traditional market, no problem whatsoever, and suddenly gets that one inquiry from a great client looking for £2.5 million of debt. And because it's not their area of expertise where they deal every day, they may know one organisation, one lender to go to, but they won't have the spectrum of lenders. They will then, phone, their mortgage club to establish whether they can shed any light on it. But because the volume of this market is so small, to be honest, a lot of the mortgage clubs sometimes struggle and will only have 1, 2, or 3 perhaps options. And so where private banker finance come in is at that point that they'll be referred to us either through their mortgage club or indeed they come to us directly, and we'll then be able to work with them jointly. And I'd just like to stress at this stage, Ben, if I can, this is a business to business service, so the introducer is our client, and therefore we respect the fact that the borrower is their client and will remain their client all the way through. So we're not about poaching other brokers' clients. We're about providing a service that allows them to give their clients the wealth of experience and opportunity through a business that has enormous experience and background in this particular market.
Absolutely, which is, I think, a really good point to make there, Chris, because it was when I was first introduced to you, that was the opposite of what I thought you were going to say. I thought you were going to say that you were going direct to consumer, that you were going to try and operate with these high net worth individuals. And actually what I've come to learn over the time that we've been working together is actually what a market there is for this opportunity here. And like you were saying, with the chains that are currently operating, what we don't see often is that we only see the bit that we're exposed to. So if you're buying a property that's, say, 250,000 or 300,000, and then the person who you're buying from is buying something at 500,000 or 450,000, that's the kind of bit that you're kind of only exposed to. But as you say, if there's 7, 8 people in the chain and someone's buying a property at the top end, that is 1.8 million, and they're looking to borrow £1 million to buy that. If that goes wrong, or the lenders aren't able to do that, that whole chain's now breaking down, isn't it? I think that's the kind of
I remember back to the days, and we may see this come back again, where the wealthy individual at the top of the chain actually ended up buying the flat at the bottom of the chain, literally just to allow the chain to complete, and he would then have his new multi-million-pound home up here, and he'd have this small flat which he would then either sell as a separate entity to the original first-time buyer who was struggling to get their mortgage for whatever reason, or 9 times out of 10, they actually then decide to retain it and keep it as an investment property, you know. And I wouldn't be at all surprised if that sort of thing comes up. But I think what I'm trying to get over in this conversation is, if the deal is a robust proposition, then there's absolutely no reason why we shouldn't be able to find finance for it. And the key to this is understanding not just the policy of the different private banks and these specialist lenders, but also the appetite. And when you start to get into this fairly niche market, appetite ultimately is king. And I was a private banker in my former life. I've been a lending banker for many, many years, and I've actually had situations where I've put a completely robust application in front of board to an existing client to buy a property, but at that particular time the bank was already fairly heavily exposed to a specific postcode, and therefore through what they call concentration of risk, they weren't prepared to take on any more properties in that postcode. So through no fault of the client, the bank wouldn't lend. So that's an appetite issue. Policy ticked all the boxes. So that's why it's so important to speak to people who have the correct connections into these different private banks, but also we have so many personal relationships with the various key individuals in these organizations now that our ability to just pick up the phone, have a very quick conversation and say, yes, that's for us. No, we're not interested in that at the moment, adds so much value to the client. Because in the high net worth market, these clients expect things to be done quickly and properly. And if you don't move quickly enough, they move in circles that, to be honest, they can often come up with an alternative themselves. I've had situations where they've borrowed off friends to complete. So it's you need, as the broker or the professional introducer out there, yes, please look to see what you can do, and if you can source it and place it, fantastic, well done. But if you struggle in any way, shape or form, don't waste time. Come to us and we'll be delighted to work with you and help you.
Absolutely. And I think certainly from the people who I know within the industry, that there are probably a lot of estate agents out there who might operate in the upper quartile, who might have a really good relationship with a mortgage broker, whether that's someone who's local, and maybe the circumstances that they are for that individual. I wonder how many of those people are sat there now going, oh, do you know what? I wish I'd known about this before. I wish that something like this had happened before, to stop chains breaking down, to stop deals going through. So I think it's a very interesting proposition for people. And I think if you were going to kind of summarize, Chris, in terms of what would the key takeaways be for people listening today, what would you like to kind of just reiterate to them?
Thanks, Ben. Yeah, I can keep that fairly simple. My first point will resonate with our audience. So, we are an independently authorised, FCA regulated business. So we are responsible for completing the fact find. We will give the advice. And that's really important to some introducers because they're not necessarily authorised to advise in this sector of the market. The introducer and indeed the borrower will therefore have access to a team of experienced former private bankers who have been on the other side of the fence, and also specialist high net worth brokers. So we can provide what I call both the banker's view and the broker's view, so that the client, the borrower and the introducer get the best of both worlds. I 100% categorically assure everyone watching this video that we will not poach the client. We are here to collaborate, not to compete. And yes, we will definitely identify potential cross-sell opportunities, usually in the remit of protection, etc. But all of those opportunities will be passed straight back to the introducer, who will then have the choice as to, yes, I'll do that, or actually, could you do that for me, please? And again, that leads to the final point, which is everyone will be well and fairly rewarded. And I'm really looking forward to just taking inquiries, talking to anyone that's interested, and explain a little bit further about the details and how we can help.
Absolutely. And again, I think just from what I've understood in these kind of short time that we've been working together, is actually Well, first of all, I think it's absolutely fascinating in terms of what your offering is and kind of why you're doing that. But the fact that when you were saying about collaborating with other brokers and the fact that they will be rewarded for that as well, I think just goes a long way in terms of just identifying that it's a real partnership that you're offering. It's not just a transactional sale. Which I think
well, I
really
mean, to conclude, I'd say a wise old sage, it's actually my mother, said to me many years ago, she said, Christopher, she said, it's much better to have a percentage of something than 100% of nothing. And that is the way, you know, we are approaching this, because unless everyone is satisfied, whether that's the introducer because they're well rewarded and their client gets good service, whether that's the client because they get the right advice and the best way forward, and indeed us for doing the work, if it's not in balance, it won't work. And that's absolutely our principal mantra in the way we've set this business up.
Absolutely. Chris, look, really appreciate your time today. For anyone who is listening, Chris's details will follow this video shortly, as well as it will be on all of the social media posts. But I hope that everyone has found that interesting. And if you are interested in having a chat with Chris and the team, obviously, please do feel to reach out. But Chris, thank you very much for your time today, and we look forward to continuing to work with you in the future.
Thanks, Ben. It's been great.